Welcome to the Billionaire Belief Show. This is Dhane, and I want to thank you for tuning in. Today's topic is men, women, and money. Let's dive on in. I wanted to talk about men, women, and money because I came across an article last week on Facebook via Financial Samurai that was basically just talking about the importance of couples, whether they're married or in long-term exclusive relationships, just the importance of both individuals having their own bank accounts. And like I said, a little bit later, we'll dive into some of the reasons why that's important, and how either party or either one of the individual in the relationship not having the ability to spend freely, how that can have a detrimental effect on the relationship. But before we do that, there was a question that I had in my mind earlier last week, and that question was, how much money is in the world? Now, when I say money, there's two meanings to money. One meaning for money is the actual physical currency or fiat money that's actually in circulation. And then the other type of money is the digital component of money, which is just the numbers that we have on our screens, when we check our bank account balance and we see, whatever we see, those numbers on the screen, that's another form of money. But of course, me being the curious guy that I am, I had to figure it out. So I went to the Googles and typed in, how much money is in the world. And I came across an article via Business Insider that basically stated that according to the International Bank of Settlements, which is pretty much like a World Bank that tracks the finances and economies of countries in a sense. According to the International Bank of Settlements, there is currently around $5 trillion of currency being circulated in the entire world. So no matter if it's a US dollar, a yen, a pound, it doesn't really matter. Like, according to the International Bank of Settlements, that's $5 trillion. That's a lot. I'm gonna post a picture on the IG. I'll probably have to save an IG story that talks about this, but I'll post something on IG that basically kind of quantifies from a visual perspective what $1 trillion looks like, so then you can get a clear understanding of what $5 trillion looks like. But the International Bank of Settlements basically said that there's $5 trillion in currency circulating in the world, and within the U.S. alone, it's around $1.5 trillion. So quarters, nickels, dimes, pennies. I got ones, twos, fives, tens, 20s, 50s, hundreds, all that, 50s, all that kind of stuff. In the U.S. alone, there's around $1.5 trillion of currency circulating in America. So the world is full of money. Some of it has your name on it. All you have to do is go collect it. Shouts out to Felix Dennis for that one. But there it is right there. And that's just, once again, ladies and gentlemen, this is currency. So this is actually money that you can actually hold in your hand. 1.5 trillion in America. But according to the CIA and their World Book of Facts, they estimate that there is roughly $80 trillion of broad money circulated in the world. So broad money also includes, once again, the money that's actually on the screen. So when we log in to our bank accounts, when we see certain transactions being made, company A buys company B for $5.7 trillion, for $5 billion. There isn't necessarily, in most instances, there isn't necessarily a currency transfer of $5 billion from one account to another. It's usually just numbers on the screen. Boom, 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 boom. Click, click, click. Boom. Good to go. So I thought that was pretty good, just so that pretty good information, because I think it's always good for us to have a sense of perspective and realizing what's really out there and the opportunity that we have at our disposal. So understand that, like I said before, shouts out Felix Dennis, the world is full of money. Some of it has your name on it. All you have to do is go out there and collect it so that you can multiply it, because that's the ultimate end game of money anyway. We want to earn it so we can obviously take care of our day-to-day lifestyle, but most importantly, we want to keep as much of it as possible so we can multiply as much of it as possible. But we can't multiply what we don't have. So if you're struggling, if you feel like there isn't any money out there, if you feel like you can't save, if you feel like you can't do it, then know that you can do it. It's just a matter of you getting focused, getting in the game, and making sure that you are making yourself a priority. And just a quick tip, specifically in regards to those individuals out there listening who have convinced themselves that they have never made enough money to save. I read a post on Instagram actually today before I came in and started knocking out the podcast. And the post was basically saying how there was a gentleman who worked for FedEx and he never made more than around $14,000 a year. You know, he would always complain to his friends and whatnot about, I'll never have any money, So eventually one of his friends challenged him to tax himself. And by tax himself, the friend specifically meant tax yourself in regards to telling yourself that you're going to take 20% of all the money that you earn out of that 14,000. So 14 times 2 is, not 14 times 2. 10% of 14,000 is $1,400. So 20% of $14,000 would roughly be $2,800. So his friend basically told him, you need to tax yourself 20%, i.e. save and invest 20% of all the money that you earn in a year, i.e. in this case, if he's earning 14 grand, that's $2,800 a year. Save and invest that for the long term, for long-term capital gains and for cash flow, long-term cash flow, long-term value, long-term growth, and long-term income. Do that for the rest of your life. And that's what old Teddy did. His name was Theodore, but Teddy is short for Theodore. But that's what old Teddy did, the UPS worker. And I think they said 50 years later, he had an investment account roughly $70 million. So this stuff is real, ladies and gentlemen. And like, once again, the most important thing I want you to get clear on is that here was a man who worked at UPS. He never made more than $14,000 a year. He was always complaining about not having enough money to save and invest until a friend challenged him to save and invest or to tax himself and save and invest 20% of his income of $14,000, which is $2,800, and do that every year for the rest of your life. And he did that. And like I said, 50 years later, he had well over $70 million. Now, I don't know the specific assets that Mr. Teddy invested in, but that is a true story, spoken by Tony Robbins himself. So if you want to get some background on that, feel free to go do that. But once again, I'm telling you these stories and I'm sharing with you these numbers so that you get clarity and understand that there is plenty of money out there. The world is full of money. Some of it has your name on it. All you have to do is collect it. You just have to put the work in. And that's all what it boils down to. And obviously, there's going to be some skilling up that you need to do, because the value that you bring to the marketplace is the value that the market will pay you. So somebody who can clean a house, that isn't a high valued service, because all you basically need is a rag and an arm that works, and you can clean the table. So you're not going to get paid a lot for cleaning tables. But if you want to help save someone's life that's having a heart attack because you're a doctor, you can do the proper procedures right then and right there, or B, you can operate on them. And then that's priceless. People pay a premium for doctors. So that's why doctors earn so much. Now, granted, doctors got to go through a lot to get to that point, but I'm just telling you this story so you can just get a better understanding of the value that you're ultimately going to have to start giving if you want to increase your income and start earning more for the same amount of time that you're putting in right now. Because that's another key point, ladies and gentlemen. It takes the same amount of time to sell a product for $10 as it does takes to sell a product for $100. So just know that it's just numbers, and all you gotta do is just sell. So with that being said, let's get into the meat of today's episode, which is men, women, and money. Specifically, the article that I read on Facebook via Financial Samurai, I was just talking about the importance of both spouses having a source of income and the means to be able to buy the things they want to buy. Now, when I saw the article, what obviously has stuck out to me, because I'm thoroughly aware that finances and relationship issues and divorce correlate at the end of the day. Like, it goes without saying. And so I've always been intrigued by that dynamic, and one of the reasons why I do podcasts and why I did start Billionaire Belief, the financial education brand, was because I remember being a kid and feeling sheepish, having to ask my parents for money and feeling judged by them for what I wanted to use the money for. And then once I did get my own money, it was that having that sense of freedom and independence to be able to do it as I wanted to do. It was bar none. It was a great experience. But I do understand like the feelings of fear and embarrassment one could have for asking for money, especially if you're an adult. Especially if you're an adult who was fending for yourself in a sense, and then you get married and now you can't. But it is important for both spouses to have some money. And like I said, let's kind of like dive into some of the big bones that I felt I got from the article, as well as some of the other things that, or as well as some other commentary I received from other individuals when I was talking to them about the article. Now, I'm definitely going to post a link of the article in the description below. So if you want to read this article for yourself, because I'm not going to cover the entire article, then you can go ahead and do that. But, we'll have the big bones, the meat. But without further ado, like I said, I'll read you the headline of the article. I'll give you that little bit of glory. So when I was scrolling down the Facebooks, I saw financial dependence is the worst. Why each spouse needs their own bank account. Now, before I even read the article, I immediately asked some of my friends who were married. I shared the article in one of my group, my group texts with my fellas, and then I asked them, have any of you guys experienced, this? And most of them pretty much said no, and most of them said that we pretty much operate from the pot mentality. I mean, from the pot strategy, where both my boys and their wives, they would basically, all income that they earned was, well, after they got married, of course, or had been together for a while, they went and got they went and got a bank account together, and all income that they get, they put into that bank account, and from that bank account, they pay all their bills, they take care of the castle first. And then whatever's left over, they, take a percentage of that, and then they split it amongst themselves, and so that they each individually have some spending money for the month, which I thought was a pretty sound strategy. So, like I said before, we all know that divorce and relationship issues correlate with finances. So why not put ourselves in the position to where we get our finances on point, so we don't got to worry about that problem, and we can do that. So let's talk about some of the reasons why this individual at Financial Samurai, some of the reasons he posed why he says each spouse needs their own bank account. We all remember, like I said earlier, feeling sheepish in a sense when we had to ask our parents for money. Mom, can I have $10 so I can go on a field trip with my friends or at school? And especially if our environment growing up in regards to money wasn't the healthiest. We as children may have misinterpreted some of the things we were experiencing in life and kind of developed this mentality where, we can't ask for money, or we didn't feel comfortable, I should say, asking for money, or we felt embarrassed asking for money, or we felt that we will be judged if we ask for money. And so these are real things, and I'm pretty sure in a relationship it's only amplified. Like I said, when you take a man and a woman who have been fending for themselves throughout their adult life up until they meet each other and decide that they want to build together, and then for one spouse to just kind of for one spouse to dominate the finances and then be aggressive about it, while the other one is left feeling sheepish anytime they have to ask. I do not believe that is going to produce a healthy relationship. But what I will say is, in certain instances, it probably is best for the relationship if one person does control the money, if that other party just can't control themselves. They cave at every temptation they have. But all in all, you wanna each. I definitely believe both men and women definitely shouldn't feel judged or feel inferior at the end of the day because they have to ask their spouse for money. So yeah, I do believe that it is important for couples to have their own separate bank accounts, or just their own. That it is important for them to have money. But what I don't believe in is either spouse telling the other spouse that you have to pay for everything. Your money. Well, it's typically the men, but I do have a problem with a woman telling a man, your money is our money and my money is my money. And I do have a problem with a man telling a woman, my money is my money and your money is our money. Because at the end of the day, I believe in teamwork makes the dream work. So if you're going to go through all that trouble of getting married, then you need to act like it. So you guys are a team at that point. And so there is no 50-50. There is no his. There is no hers. There is no me. There is no mine. It's we, us, and ours, period, moving forward. From the day y'all say I do until y'all's last day together. It is a team effort. So because it's a team effort, then yes, we're going to go get a joint bank account. And we could keep our personal accounts that we both had before we got married. But we're just going to have to do things a lot differently now. And with change, with change comes growth at the end of the day. So, we're going to start putting all of the income that we earn into our joint account. So we are both clear as to, what our income is and how much money that we have to take care of our house, our castle, our kingdom. You feel me? We're going to put all of our income into this pot right here. And then from this pot, the first thing we're going to do is we're going to put 10% aside for investments. And then the next thing we're going to do, we're going to put 10% aside for savings. And the next thing we're going to do, we're going to take 65% of that and we're going to put that towards making sure all of our fixed costs in our household, in our castle, and in our kingdom are accounted for. And then we're going to take the last 15% and then we're going to just spend that on things like going out, clothes, fun, entertainment, whatever it is y'all want to do. And then whatever's left over after that, we'll just roll that over into our savings and in our investing accounts. And then boom, you know what I'm saying? Y'all good money. So let's go through a quick example. So let's just say we have a man and a woman. They decide they want to get married. They was both making $5,000 a piece. Now collectively, how much is that team now making? That team, that couple, they're now making $10,000 a month. So based upon the example I just gave, here's how they will bust that money down. The first thing that they will do when they get their money is they will take $1,000, 10% of $10,000, and they are going to send that straight to their investment account, i.e. Robinhood. Next, they're going to take another $1,000, 10% of $10,000, and they're going to send that $1,000 to an online savings account that they started. That's paying the best interest rate it can for an online savings account. But boom, they're going to put that that $1,000 there. So after those two functions, those two actions, they have $8,000 left. Now, they're going to take $6,500 and they're going to use that to take care of all of their fixed costs in their household, in their castle, and in their kingdom. So that means the rent, the utilities, the communications, the insurance, car, health. They're going to pay for, if they have student loan debt, they're going to take that out of those fixed costs. Anything that's fixed that you got to know you're going to have to pay every month, like that's the money that comes out of that fixed cost account. And if they have any credit card debt, they're going to use money from that fixed cost allocation to pay that stuff down. And then boom, so $6,500 goes to that. They go pay all that down. Then what's left over is $1,500, 15% for spending. Now, here's how they could bust that down. So they could split it. Both of them send half of $1,500 is $750. So they could both take $750. He'll send $750 to his account, and he'll send $750, or whoever's running the account, whoever's responsible for the finances. She gets $750 for personal spending cash for the month. He gets $750 personal spending cash for the month, and then boom, everybody's happy. We're all winning. And I believe that that's how it should be, period. There is no, like I said, there is, once you go through the effort and the trouble of getting married to someone, then be married, be a team. So teamwork makes the dream work. There's no more I, or for how some people are like, well, the traditional man, he provides for his family and whatever I earn is no, like house money, period. There's no me, there's no mine, there's no I, there is us, we, and our. So irregardless of how much money this man makes, boom, you know what I'm saying? Y'all both is on the same team at that point. So approach it accordingly. Now, for those people out there who think that it should be another way, to each his own. I'm just here to give an example. I'm just here to give you framework at the end of the day. But it's up to you to adjust the numbers, the allocations according to your situation. But all in all, like the process works. You know what I'm saying? Like my grandparents, they did the pot strategy, and it works. To an extent, I should say. There was a little caveats there, but for the most part, every married couple that I talk to that's enjoying themselves and it looks like they're going to be together, specifically when it comes to money, they all operate out of the pot strategy. They take all the income both people is earning, they put it into that pot, and then from that pot they bust it down from there accordingly. So hopefully that could work for you, especially if you've been looking for a system that you and your partner can work out. But when it comes to, I don't know, I'm pretty sure some of you, like, once again, you got some traditional contemporary people listening. So like I said, at the end of the day, you got to do what's best for you and yours. But as far as I'm concerned, when I do decide to get married, if that is something that I decide to do, I at a bare minimum, I'm definitely gonna have an old lady. But when that time does come for me, then best believe we will be operating out of the pot strategy. And as far as who's responsible, that just depends on the couple. Some people like numbers, some people don't. Some people want to be dealt with it, some people don't. That's between you and your spouse and you and your partner. But I just know for me and mine, this is what I do. So obviously this is what I will be doing, and I will be responsible for it. And like I said, we will be operating out of the pot strategy, period. No ifs, ands, or buts about it. And if any woman believes otherwise, then that's a deal breaker for me, period, point blank. I don't care how much I think I might feel I love you, because love is volatile emotion that comes and goes, but every day, every month, rent is due, and we got to make sure that stuff's taken care of. Now, going back to the Financial Samurai article, she did list some reasons why it is important, and I'll just briefly go over them. Reason one was a release valve. Like I said before, if couples have to, in a sense, be asking and feeling sheepish and embarrassed about asking their partner for money, then ultimately some resentment is going to be created. So having separate accounts that both of you have access to will allow you to have, in a sense, a release valve, so that you're not feeling all bottled up. Secondly, he said insurance policy. Obviously, if one person goes down, then because the other person, is up, the family can stay financially afloat. And lastly, trainer, encouraging each other to be prosperous. I'm pretty sure you got some people out there. Well, what if, the man only makes $2,000 and I make $4,000, and that means that y'all family earns $6,000 that month and bust it down appropriate. Well, what if the man makes $4,000 and I make only $2,000? Then the same rules apply. y'all household made $6,000 that month, and you bust it down accordingly. And it's just that simple, ladies and gentlemen. Like, once again, you're both on the same team. You're not opponents. So why are you competing with each other? Stop it. You know what I'm saying? Stop it. Just all in the name of love. So, as always, that's it for today. We'll wrap it up right now. But to recap, men, women, and money. Make sure that y'all do the best y'all can to move as a team and encourage each other to prosper. I mean, that's just ultimately what it's all about. You know what I'm saying? Y'all say y'all love each other. Y'all say y'all care about each other. You say you want the best for each other. So live it, act it, period. And it's really that simple. So, like I said, encourage each other to be prosperous. Everybody, you're both on the same team. You're not competing against each other. So it is no more I, me, mines. It's us, we, and ours. And, if y'all, everybody's situation is different. So, it's up to y'all to figure out the allocation amounts and whatnot. But at the end of the day, just trust the process. At the end of the day, that's really what it boils down to. Trust the process. So on my way out, as always, ladies and gentlemen, make sure you follow us on Instagram at BBWCN. If you have any questions, have any feedback, or you got something to add to the conversation, make sure you drop it in the comment section below. Don't forget to go to billionairebelief.com. I have a free financial education study guide that I would love for you to have. This is going to help you lay the foundation to what you're going to need to do to make sure that you get and keep your finances on point. And I am also working on a product. It's going to be the first product. It's going to be a financial education course to help you implement a system that will help you build up your savings and investing accounts, as well as raise your credit scores so you can have your finances on point so that you can multiply that money and still be prepared for when life happens, because it will. That does it for today. Like always, I love you. Get at me if you have any questions. If you want to participate, you know what I'm saying? I'm always here to help. So make it a great day, ladies and gentlemen. Peace.